I can tell you that corrections are healthy, they're normal. I'm not worried about the markets. Over the long term, if we put good tax policy in place, deregulation, and energy security, the markets will do great. All the other things we do, if we're deregulating, if we're getting energy prices down, then if we look across the spectrum, Americans will realize lower prices and better affordability.
All right, that, of course, was Treasury Secretary Scott Bessent. Now, joining us, Stephen Miron, Chair of the Council of Economic Advisors, recently appointed. Stephen, welcome back. You were actually on this show once upon a time. You were on set with me, so good to see you again. Congratulations on your post. Let me just ask you what you can tell us about tariffs on April 2nd. President Trump talked about it on the airplane coming back from Florida yesterday. Are this reciprocity tariff, is this going to be a country-by-country tariff, or will this be a product-by-product tariff? Let's start there.
Thanks, Larry. It's great to be here, and it's good to see you again. The president has been very clear that he wants to put trade on fair and reciprocal ground to improve the playing field for American workers vis-a-vis other countries. Now, I can't get ahead of where conversations are and where negotiations are, but you can bet that the president is going to do a lot to make American trade more competitive and stand up for American workers.
So at this point, decision hasn't been made yet whether to go country by country or product by product, or for that matter, could be both. I understand that.
Yeah, so these conversations are developing and the policies are developing, sort of as we lead into April 2nd.
And I'm reading in another media site that the special trade rep, Jamison Greer, whom I know very well from the first term, is actually undergoing a review process, but he's also taking comments from businesses and others. Is that the case?
Yeah, so Ambassador Greer is doing a fantastic job helping to implement the president's policies, and the president is determined to put American workers on fair ground, and Ambassador Greer is trying to do so in a fantastic way.
All right, so let me try to parse through this just a little bit more.
Yeah.
The reciprocal tariff, you tax me, I'm going to tax you, or you cut your tax, we'll cut our tax as well. That's how I understood reciprocity. It's a concept, by the way, I fully agree with. I think the president is absolutely right on this. Is there any sense of how many revenues, how much money might we get, let's say, over a 5-year period or over a 10-year period? Is that going to be inside the budget when you all put out your budget in a few weeks? Or might it be part of the tax bill and the reconciliation bill? What kind of revenue yield do you think you're going to get?
Thanks, Larry. So I completely agree that trade should be reciprocal, exactly like you're saying, and the president has been very clear about this. The president thinks that if other countries are charging us very high tariffs on our exports to them, then we should be reciprocal and charge them high tariffs on their exports to us. And that's just a basic notion of fairness, and I think you're hitting at it very clearly. Now, the other thing that you mentioned that I'm thrilled you asked is revenue, because the truth is that we can raise trillions of dollars of revenues from these tariffs over the 10-year budget window. And if you think about what happened with the president's first term, President Trump raised tariffs on China, which contribute over about a 10-year budget window to over $400 billion. And the president used those revenues to finance lower tax rates on American workers and American firms, which means we take revenue from abroad and we use it to cut taxes on Americans. That, to me, is fabulous policy and exactly what we should be aiming for to usher in the president's new golden age. And I think that the president will pursue policies like this as we go forward. Now, how much revenue are we going to raise? I don't have an exact number for you, but it's big. It's a lot. You can raise a lot of revenue from tariffs.
Well, trillions of dollars is a very big guesstimate, Steve Miron. It's a big number.
Oh, yeah.
I mean, it's trillions of dollars. We could probably bring the income tax all the way down to 15%, the personal income tax, to match the Made in America corporate income tax, which, by the way, would make Steve Forbes very happy.
Yeah, no, I don't have an exact number for you because the policies are developing and I can't get ahead of negotiations, but I do think that it's perfectly reasonable to expect that we could raise trillions of dollars from tariffs over a 10-year budget window. And like I said before, using those revenues to finance lower rates on American workers, on American businesses, that's how you get people investing in America. That's how you get jobs created in America. That's how you get firms hiring in America. And I think that is a fabulous policy combination that all Americans should applaud.
So just to circle back on the reciprocity concept again.
Yeah.
As I understand it, not only tariff rates, but also non-tariff barriers, maybe
Yes.
even subsidies for that matter. That gets you into some tricky business on the estimating side. I mean, how to price out a non-tariff barrier, for example, in judging the reciprocity. Let's take the EU, which is chock full of them, by the way. I can tell you that because I was involved in some negotiations when Bob Lighthizer was special trade rep. Anyway, how do you quantify the so-called non-tariff barriers?
Yeah, again, a fantastic question, and that's the heart of part of the policy question, because, it's one thing to sort of say that a country has a low tariff rate, but if they don't open their markets to us, irrespective of tariffs, they don't let our companies enter the country to do business, it's unfair, and they're keeping our companies out while they continue to sell to us. And President Trump has been very forceful, standing up for American companies and American workers, saying that this isn't going to stand anymore, and he's not going to allow this to happen anymore. And so estimating the non-tariff barrier portion of it is a critical policy question, and there's a variety of approaches you can take to doing so. What I can say is that, we have to figure out what the right way to do that is, and I can't get ahead of where the conversation is at this point, but I do think non-tariff barriers, as you point out, are a very significant, thing standing in the way of fair and reciprocal trade. And at the end of the day, that's what we want, and that's what the president has said that America is going to do.
Yeah, I mean, look, something like intellectual property theft, which China is famous for, and which, by all accounts, they continue despite our phase one trade deal in the first term. I mean, that stuff's going to come up time and time again. Steve, let me go to the other stuff that's happening. Of course, today the stock market's doing very well, and it jumped back on Friday. So maybe the theory that there's a tariff tantrum going on Wall Street is not such a great theory. But I'm sure you've heard already in your short tenure at CEA, the tariffs are inflationary. No, wait a minute, they're recessionary. No, wait a minute, they might be both. No, wait a minute, they're killing the stock market. How do you respond to all those theories? They're unproven, to be sure, but those theories are abundant.
Yeah, so I'd say two things in response to those claims. First is that imports are only 14% of GDP, right? So 86% of all purchases that Americans are making are coming from within the United States. So it's just not plausible to think that something that's such a small portion of GDP could have those types of negative consequences that you're describing above. It's just not big enough to matter. We're not a small open economy. We're a big economy. And so that's why we have the leverage to pursue the policies that we're going to pursue. The second thing I'd say is that, look, we just ran an example of this in 2018, 2019 during President Trump's first term when he created the best economy of our lifetimes, right? And that was in the presence of the trade war in the first term with the tariffs that the president was levying against China. And in that period, growth was fantastic. Inflation was nowhere to be seen. There was no evidence in the macroeconomic data at the time or in the stock market at the time of significant drawbacks from tariffs. And so why should we have it now?
It's funny listening to you run this down. It's quite plausible, Steve Myron, that all these theories are wrong. The recession theory is wrong, the inflation theory is wrong, and the stock market theory is wrong. Let's not rule that out. It wouldn't be the first time a whole bunch of theories were wrong. That's all. So I just thought I'd inject that and was very interested in your answer. I got to jump.
I think they're...
No, go ahead. Go ahead. One more shot. Go ahead.
I was going to say, I think they're the wrong theories. And economists know that whenever you're sort of levying a policy change, the more inflexible party bears the cost of that policy. And other countries are inflexible because we're their only source to export to, right? The American consumer is the biggest source of demand in the world, and they don't have a choice. There's no substitute market for us. So as the president points out, we have all the leverage.
Yes, indeed. Anyway, Steve Myron, our new CEA chairperson, thank you very much for coming on. Best of luck on the job.